Hello everyone, my name is Joseph Corson, channel is called Ethernet Wink, and in today's video I'm going to show you guys how to make an algorithm that trades two different futures in the same algorithm. And so before we get into it, I gotta say this is for educational purposes only. Do not trade real money with the strategy. This is strictly to show the fundamentals of coding in Quant Connect. And also, like, I'm back. I know I haven't uploaded anything in a while. I've kind of just been enjoying myself after college, or my first year of college is over, so pretty happy about that. And I have an idea about something I want to possibly share with you guys when the next semester starts. Something to do then. But let's get right into the code. I don't want this to be a long video, so I'm going to go kind of fast. And because I want to show you guys two things, so we're going to get right into it. Also, I'm not going to code anything along with you guys. If you want to see this code and have it, I'm going to put a link to a discussion forum with this code in it. Just go there and you can copy and paste it, and then you can follow along, understanding everything in your own machine. So let's get it going. Pretty much everything is just done for the S&P 500 and then done for the VIX. So let's get her going. What are we doing in these two chunks of code? In these two chunks of code, we're adding the futures that we want to trade, and we're also studying the extended market hours to be true. I always do that because, like, it's going to trade anyway. What do I not want my stop loss to be hit when it's just because it's trading in the end of the day? You know what I mean? I just always set it to be true, so that way I have no issues with that. But so we're adding our futures and we're storing them in this variable. We're setting the filter to it, so we're not going to keep any futures that expire in more than 182 days. And then we're just going to get the symbol version of this and store it in the variable. And we do the exact same thing for the VIX. So this is S&P 500, this is the VIX, and so we differentiate them in the names of the variables as well. Self.future is just the S&P 500 future, and self.vix is the VIX future. Next, we declare some variables for our order management. So we have an entry ticket, a stop ticket, a profit ticket, the contract symbol, and the price for both of them. And so those are very helpful for when we manage these positions. Next, into OnData. What this little part of the program is doing is basically saying if we're not invested in either the VIX or the S&P 500, buy both. Both these functions right here, buy both. Right? Very easy to understand. Next, what we're doing, if we're checking to see if we're invested, pretty much checking to see if we're invested again, and then we're checking to see if we really are long that thing. And if we are long, then we want to see if it's going to expire. If it's going to expire in a day, we just want to liquidate that thing, future to close to expiration, and then we want to set our entry ticket back to none, so that way we can trade again. And we do this exact same thing for the VIX. Next, we're getting into the buy future function, which is very important. I'm pretty sure this is what a lot of you guys want to know when you click on this video, is how do I just buy a specific future with having multiple of them in the same program. This is how you do it. You get an instance of the futures chain by specifying, like, data.futurechain.get the specific symbol that you want. We remember from the top, this is for the S&P 500 E-minis. So just data.futureschain.get this symbol, and then this variable chain is the futures chain for it. So now, if that chain exists, pretty much is what we're checking, so that way we avoid an error and actually do get to buy it. If the chain exists, we're going to select the front month contract and store it in this symbol. What does front month contract mean? Well, futures expire, but you know when you go on TradingView and you see the intraday price action for everything, this is the front month contract, right? It's at this price, whatever. And there are multiple different chains for the futures, like we saw over here. I actually didn't show this, but this is a calendar for everything. All of these contracts for the S&P 500 exist. How do I say I want to trade this one? How do I say I want this price action? Well, it's this line of code right here, making sure that we're sorting them, reversing it, and getting the first one. So now that we do all that, we can trade this security. So first thing we do is we get the price for it, because we're going to use a limit order to enter, so that way a bracket order works. So our long entry ticket is this limit order right here, pretty self-explanatory. We buy 2, and then right after that we're going to send out our bracket order. So profit ticket equals the limit order with a gain of 5%, and the stop ticket equals a stop loss with a max loss of 5%. right? Pretty simple, not that crazy. But this is pretty much, I think, what everybody wants to see, right? It's just chain equals data.futureschain.get for that symbol. We're only getting the futures chain for this symbol. And then the exact same thing, but for the VIX. We have our VIX chain because we're getting the data from our VIX future. Very easy to conceptualize and think about. And in this, we have to buy 4 with that same 5% or whatever. I just chose those numbers arbitrarily. Next, we're in on order event. Now, in this one, we just want to check and see if any order we place is invalid for whatever reason. If that does exist, just set these things equal to none again. If it's invalid, we didn't buy shit, so just set them to be none again so we can try again. In this one, we're checking to see if the order event status is not filled. If it's not filled, then we return. You don't even really need to have this in there, but it's in there. Next is pretty much an error handle. If self.long contract symbol is none, return, because on order event is us submitting our order. But once we submit it, if this line of code isn't here and we could try and check if our take profit and stop loss got hit, well, it wouldn't, because we don't have the thing yet. These orders don't exist because this doesn't exist. So we're pretty much checking if there actually is a future in this variable that exists, if we actually are invested in something. And if we are, then we can continue. If not, we're going to return because there's nothing for us to check. Next thing we're going to do is we're going to check if either our take profit or our stop loss ticket got hit. If one of them gets hit, then we want to cancel the other one, right? That makes sense. If our take profit gets hit, we're going to cancel our stop loss and vice versa. We don't want to have like our take profit get hit and we don't cancel our stop loss and we get in a new position and we have like 2 stop losses or something. We don't want that to happen. So that's what this code does. And if you didn't think so already, we do the same thing for the VIX. We check to see if we actually do have a contract in the VIX, and we make sure that that exists before we check if either one of our orders got hit. And if it did, then we cancel the other one and just set our entry ticket back to none, so that way we can trade again. So that's pretty much it. I feel like this is the part that trips up a lot of people, is how do I just get that symbol in its own little thing, but that is how you do it. And I found that storing the things in variables and putting the bracket order out in the buy function just made everything a lot easier, made this function a lot cleaner. Just having these 2 lines up there makes a world of difference in my experience. And now, another thing, set the cash to be a lot, right? We're buying 6 futures at a time. In this case, I chose those numbers for no reason. But set the cash to be a lot so we don't get margin warnings, and this is the result of the code. Right, we get a 21% return over the year with our hedges and stuff. And let me get the benchmark up so that way we can see. I don't remember what the S&P 500 returns at that point in time. But yeah, here we see it. Here is let me try and find a good example of not going below, not hitting the low that it would have. And it looks pretty similar actually, but if we go into the orders, we actually get to see that it's working quite well. Here, let's start right here. We buy 2 ESs, we sell them, we buy 2 ESs, we sell them at the stop, so we get stopped out, and then we cancel our limit order, and then we see the buy order for the VIX get filled, and then we actually get to see the take profit on the VIX. So this is that hedging that we were talking about. So that's conceptually working well, and yeah, we have a 77% win rate. It's pretty 1-to-1, so that's good. Trade 28 times in that year, and Sharpe ratio over 1.7, so that's pretty great. But yeah, that's it. Just going along short, the 2 things. But now I'm going to just show you guys what the code would be like if we let's spit it out. If we try and go, this is with just going long the futures. I want to show you guys what it would look like if we go long and short the futures. This always happens when I copy and paste over from Google Docs, so just bear with me when I get it a little closer together. And I added some more comments this time. But this does not work properly. And I will show you guys what I mean in just a minute, because if I don't do this, I'm going to lose my mind. I have to do it every single time. I'm sure that everybody that's a little psychotic out there understands. It's a lifestyle. It's a lot of code. It's a lot of just doing the same thing for the different variable, all the checks to see if we're long or short, all this crap. And there's another part of it as well, because we have to know whether or not we want to go long or short. So that's where our friend the that's where our friend the 200-day moving average comes in. So if we're either if we're not in anything, and I put them in parentheses because it represents like the pairs of being long the VIX and the S&P 500, or being long or being short them, my mistake. So that's why I did that, just to visualize it a bit better. What we do is we check and see if the S&P 500 is above or below its 200-day moving average. That was just the little idea I had on how to make it work, and also everything up here is the same. But so yeah, if we can enter a trade, and if the price is above that, when we want to buy, and we notice only one function, we'll get into that. And if it's below, we want to short it. And so this is pretty much the same thing. We are avoiding error because we just, it avoids error, because if we try and have this without this, then we get an error. So we just check and make sure that's all good. And this is just checking to see if the future is close to expiration, and if it is, then we're going to sell it. But here we have basically the code from this program, this last code that we had, just basically shoved into one function. And so we have the different variable names, all of that. And this is where the problem lies. If the VIX chain, well, I'll run this right now, and then we'll come back to the code, so that way we can just finish off showing all that. But yeah, we're going to look into the logs and see why, and we're going to see something else as well. But yeah, this is basically it, buying both the futures in one function first, so I thought. And I have the VIX function right here. I'm just going to get rid of that. It was for an idea I had that totally ate up the memory. Yeah, I'm just going to get rid of this as well, actually. Excuse my preparation. But yeah. So it, in theory, should do it all in the same function. But as we're going to see, that doesn't really work. And that's also part of the reason why I'm making this video. I have no idea how to fix this. And so if anybody has a suggestion, if anybody has run into this, I have the logic, but I have a big issue that we're going to get to. So let's keep going. Again, we're just adding the symbols to basically everything. If long contract symbol is none, or the short contract symbol is none, then we're not going to do that, because we're going to check if the order event is the long contract symbol, then we're going to check if the long I don't know why I separated it like that, but we're basically, oh yeah, just to avoid error again. See, this avoids error. So if the long contract symbol is the ES order, then we're gonna see which one it was and cancel together, and then same thing for VIX. Right, it's just the same thing, but we're just adding this little layer of if it's the short symbol. If it's the symbol that we're shorting, that's the symbol that we're going on. We store them in two different variables just to make these things simple. So we see here short VIX contract symbol as opposed to VIX contract symbol. Yeah. So now let's go back to this code and go back to the error I'm having. I know that this video is a little all over the place as well. We failed to get the VIX chain, because if we see right here, if VIX chain and if not VIX chain, pretty much, where is it? Where is it? Why is it working in the other one and not in this one? I don't get it. I don't know why. I don't know how to fix that. I don't know. It's data in both this and on data. I don't get it, but hopefully that's what you guys are for. I'm going to put this in the Quant Connect discussion as well. But yeah, and we also see in the orders, it's just we're just going long ES, you know. So if anybody has a suggestion for that, I'd be happy to take it, be happy to try it. I have tried a bunch of different things, but obviously nothing worked. If I'm defeated, just making the video with this not working so well. But if you guys enjoyed the commentary over the code that does work right here, I hope that you guys learned something new. You can make your own little hedging algorithms with just this simple little concept right here of just the dot get on the future chain. But yeah, I hope that you guys enjoyed that, and I hope that I had a good video to make in the future for you guys. But yeah, thank you guys so much for watching. Again, don't put real money into this strategy. If you guys have any questions for me about strategies that you want to see me code or anything like that, please drop them below. Someone commented asking for this. That's why I'm making it. That's why I made it. So yeah, if you guys want another Stock Sundays, I'll do that. See, people are following me on my TradingView. I haven't posted a new idea in a while. I just posted the bonds. Still in the bond trade, man. I'm not worried about anything in this trade. Suddenly, my brokerage account is a savings account yielding 20 to 30% is how I'm thinking about this. Right? Why? Get back up there. I don't need much. Get to 120, man. What are you doing? Get to 120, sell your leverage, and then let the rest ride to what? 130-ish? You know what I mean? Alright. Don't get me caught up. And I bought ZROZ. I bought the ZROZ. It's easier to say it like Hugh Hendry. I love Hugh Hendry. But I bought ZROZ. I bought TMF. And I bought the Tilt. So yeah, I hope you guys enjoyed this video. I hope you guys have questions. I hope you guys have things you want to know, things you want to ask me about. And yeah, I'm going to link the discussions in this description. I'm going to link this in the description as well. And yeah, please comment something you want me to do. I'll get to it. I'll make it. You might have to wait a while like the other person did for me to make this video, but I'll make it. I'll get there. Don't worry. But yeah, my name is Joe Scorsone. Channel's called Ethernet Wink. I'll see you guys in the next video. Have a good one.